The bond market sold off. Did you notice the 10-year Treasury improved by 30 basis points in a day? That's a big rally. That's a big improvement in rates. We had a humongous lock day today, like triple our normal daily average.
Get ready for a new episode of KP Talks Dollars and Cents. Learn financial literacy and get real-time updates on all things housing, finance, and real estate. So let's get started. Here's your host, Kevin Perenio.
Hey, it's KP coming to you live from Greenville. I'm here in the M Streets in Dallas. I almost just ran over a possum. Go Rangers, by the way, who are not playing a possum. Came out and won on the road. Road stands for Rays, Orioles, Astros, and Diamondbacks. They swept on the road. Anyway, big Fed day yesterday, and I'm driving. I'm off. I have a lot to talk about, but I just don't have a lot of time. So this is a first. So I'm in a rental car, a nice little Volvo SUV. Hertz is very nice to upgrade me. All right. So I'm in Dallas. I'm here for a charity golf event. God knows it's kindergarten. My good friend David Wilson, we were in Cub Scouts, Boy Scouts, and soccer together. He went to Texas Tech. I went to Texas. When he was out of school, he was a landman, and he was out, going to people's homes and negotiating, mineral rights and leases for, oil wells and stuff. And somebody ran a four-way stop sign and hit him, and he was paralyzed mid-chest down. So we come back every year, and we play in a golf tournament and raise money for him. So love the guy to death. We're here. Golf in the morning and then an auction. So I'm officially on vacation. Of course, I've got meetings and calls, and I never stop. And thank you for those that put in money for the PRMG Cares art auction for all the pieces that Caleb Malice, our partner Gary Malice, who's over cap markets and strategy, his son, put out. And you can still go buy prints. So in a spirit of giving this week. So let's go. All right. The Fed talk, Fed week, jobs week, data week, tons of stuff. Fed did not raise again. That's 2 in a row. So now it's put up or shut up time at the next meeting. So the next meeting is December 15th. And they also have to put up their dot plot. So remember, the dot plot is where they project what the terminal rate will be, how many cuts they think there'll be next year, where they'll be, where the economy will be. It's like a projection. And it's put up or shut up time at the next meeting. They got to duck it this time. So everyone's still guessing. The guess as of right now is that they're done, but we'll see. We have a lot of data to come out between then and now, about 6 weeks. But for now, the bond market sold off. Did you notice the 10-year Treasury improved by 30 basis points in a day? That's a big rally. That's a big improvement in rates. We had a humongous lock day today, like triple our normal daily average. So, again, I've been saying it can turn on a dime. This is just a precursor of what it will be like when it truly does turn, and it will turn. It always does, every time the cycle ends. But we're not there yet. We still have high rates, higher for longer is what they said. But, worker productivity has been coming out pretty good. We have a big jobs report tomorrow. The Bureau of Labor Statistics has a jobs report that comes out the first Friday of the month. So this will be October's jobs. I was doing air quotes because it's really like the second half of September and then the first half of October, because I can't really get all the data for October that just ended the other day with Halloween and have it all compiled and taken together. I mean, it's like a household survey, hey, we're calling. Do you have a side job? No side job here. Anyway, it'll be interesting to see if there were revisions downward to last report. And remember, it was a big hubbub about, it was mostly government jobs, not a lot of white-collar jobs being created. We know there's been a lot of Warren Act notices, which means there are a lot of corporations letting go of 100 or more employees out there last month. So will that show up in this jobs report? And will the part-time jobs be another factor? So I think the number estimate tomorrow is like 189,000 jobs created. It's interesting. That's less than 200,000. That still shows a declining trend of jobs being increased. Where are the jobs? What kind of jobs? Wage inflation. Was it back to normal? So, those are big data points that are coming out. Now, the other big reasons, not just that the Fed was speaking this week and held rates steady, but remember, I've been talking about this Treasury quarterly announcement where Treasury Secretary Yellen comes out and says, here's how much the government is going to sell. And last quarter, they had $1 trillion in loans, in treasuries that they were selling. And the estimate for this quarter, for Q4, was that she would announce like $830 billion, so less than $1 trillion. Well, the number came in, and it was like $770 billion. So it was less than $800 billion. So significantly less treasuries being forced onto the bond market, which they've already been revolting, right? The biggest buyer of treasuries, the Fed, isn't buying. China and Japan are pulling back. They're net sellers because they're controlling their currency, which, by the way, the Bank of Japan didn't really set off any fireworks again during their version of the Federal Open Market Committee meeting, which was earlier this week. So their yield curve controls at 1%, but they're, they didn't do anything that was earth-shattering. So European Union, the Eurozone, they did not raise their rates. And so all these central banks kind of work in concert and together with each other. So have we found the bottom? Have we found peak yields and, again, peak interest rates? Now, remember the last couple months were like crazy. Like the 10-year treasury going up as much as it did, as fast as it did, to the point that it did, was more of a buyer strike of treasuries, more of a revolt than really fundamental or even technically based. And so look up Rick Reeder from Blackstone, okay? This guy, when he talks, he literally moves markets. This guy is super brilliant. He's in charge of all of fixed income securities for BlackRock. I mean, like trillions of dollars that BlackRock buys. They're one of the bigger buyers in the world. They're forced to buy this paper when we had to spend, because we're an overspending government with all the bills that we passed. BlackRock is a big buyer of that. Now, this guy Rick goes on CNBC every now and then. He spoke the other day, said some pretty interesting stuff, that they were forced to buy about $400 to $500 billion in treasuries owed. That's every week, okay? And that's why we saw the yield go up. Now remember, even though there's like, let's call it 780 billion or 770 billion that we're having to have new treasury issuance, there's old treasuries that are expiring that need to be refunded, like rolled over, right? So like when a commercial loan comes due, they're like, they got to be refinanced. They got to renew it. Same thing with our treasuries. So that number is as high as something like $2 trillion a month in treasuries that the entire global market has to absorb. It's insane. It's crazy. So that good news, that quarterly announcement that there'll be less new treasury issuance, and hats tip to Dan Habib, who had a call with our retail channel today. He broke down even more that another reason, not just was the amount lower, but there were a lot more 2-year and 3-year and 5-year notes in that 780 billion. And the reason why that's interesting is because they will roll off at a time when everyone anticipates us to be back to normal growth. So when those have to refund, they're not necessarily going to be, in 2 or 3 years from now at a higher rate, right? So that's good for those bond buyers, knowing that if they're buying new issuance in this quarter, that it's very likely that when they sell those, they could be selling at a higher price, or when they refund them, it should be a better deal for them. So all very interesting stuff. I will tell you, I'm not a bondinista, but it's really amazing to watch, just how all this stuff, all these mechanics work. Now, I've heard some other cool stuff. Remember, there's deglobalization going on. So the BRICS nation, Brazil, Russia, India, China, South Africa, they rolled out BRICS Pay. And BRICS Pay is a blockchain-based, not cryptocurrency, where they can transact with each other as a nation and not have to do an end around for the dollar. And don't forget, they're admitting more nations in January. Iran, Saudi Arabia, sworn enemies, are now part of BRICS Plus. Egypt, Ethiopia, Argentina, UAE, they're all going to conduct business with each other with BRICS Pay and not have to do it in dollar denomination. That's not good for us. Won't have an immediate impact, but long term it will. So anyway, we're going to watch this jobs report tomorrow. Let's start off November strong. Like, rates are coming down. Make sure you tell your clients this is your second to last good chance to lock in a good price. Have a great weekend. Cheers.
You've been listening to KP Talks Dollars and Cents, a top-rated show for those who want to learn about the economy and mortgage environment. Tune in each week for more episodes, and please leave us a 5-star review on Apple Podcasts and Spotify. Kevin Perenio does not render or offer to render personalized investment or tax advice through KP Talks Dollars and Cents. The information provided is for informational purposes only and does not constitute financial, tax, investment, or legal advice. For more info, follow KP Talks Dollars and Cents on all of our social channels.